So we're sitting at all-time highs, triple digits will happen as far as I'm concerned. There may be some reaction during that period, and then we go 333. That's not the top. It's our final target for the position, but it doesn't mean it's the top because it's a secular blow-off market. So we'd probably reduce by about 40-50% our positions and then revert to overperformance management. When we go single digit on the gold silver ratio, I'll flip back into gold and or other assets that will be relatively cheap, which could be property, farmland, agri, other areas of interest, stocks potentially as well. So that's your answer to your question regarding triple digits. It's not if, but when, and it goes actually, in our view, likely into 4 digits and single-digit gold-silver ratio.
Market strategist Francis Hunt believes precious metals are entering a historic secular blow-off phase. With prices already at all-time highs, Hunt argues that silver reaching triple digits is inevitable. In his outlook, short-term reactions won't change the larger trend, with targets extending toward 333 and potentially even 4-digit silver prices. Hunt also highlights the importance of the gold-to-silver ratio. When it falls into single digits, he plans to rotate out of silver and back into gold or undervalued real assets like property, farmland, and select stocks. According to Hunt, this cycle represents a rare opportunity to outperform traditional markets during a major monetary reset. Now, we present the clips from Francis Hunt's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
November 24, when silver triggered on a primer, we have a squeeze within a squeeze. So HVF method, our methodology trades constriction with a massive expansionary move with a very tight stop. We've been in a quarterly, that's a 3-monthly mega structure that spans that entire lifespan of myself. You can even go back to 64 and the run up into the 80, that whole setup right the way to 24. So you're counting a 60-year structure set up. And then within that, we had a squeeze within a squeeze, which is the primer that gave us very tight entries at 25.9. And we've been calling, and we even got, believe it or not, quoted in the Jerusalem Post for saying $333 for silver now. That was about 6 months ago. That was a crazy thing to say 6 months ago. A lot fundamentally has happened recently. That makes it sound a little less crazy, and a lot technically has happened, and we've gone from that 25.9. It coincided with my friend Brent Johnson saying, here goes the silver guys losing their head because they're crossing $25 for, its annual pilgrimage and round trip back. He literally called the primer break as it was starting that journey. It went up, it broke 30, 40, 50, 60, and here we are at 70. Unsurprised, benefiting immensely, our community benefiting immensely. Precious metals, hyperstagflation is the model, economic model, and this continues to run and surprise people. We have a pause, but your question was around the 3-digit marks, so let's answer that. We have an interim target level that is generated from natural geometry as per a method that is usually very well respected at the $90.56. So that means you run 90.56 and then you chop and churn potentially for a little period. So you've still got potentially quite a bit more brisk upside before you run 90. And the interim levels are usually beaten. So to beat it by 10% will bring you to the threshold of triple digits before you might get a bit of rejection. So I think the interplay with triple digits and silver is going to be where you might have quite volatile moments. Until then, you want to stay aggressively and broadly long. You want to continue to be a stacker as an investor. And as HVF method trader, we continue to turn our profits into new entries on smaller time frames. And I've just got entries, and the stops are all trailed now, mostly into profits, and apart from the very, recent ones of the last week or so. And it just continues to reward us. So we're sitting at all-time highs, triple digits will happen as far as I'm concerned. There may be some reaction during that period, and then we go 333. That's not the top. It's our final target for the position, but it doesn't mean it's the top because it's a secular blow-off market. So we'd probably reduce by about 40-50% our positions and then revert to overperformance management. So we expect the structure to overperform because it's a macro setup. We treat it as a first in a new trend. So blow off numbers to 1,000. I will utilize, because the next question is, when do you ever sell? Because you sound like such a bull. When we go single digit on the gold silver ratio. I'll flip back into gold and or other assets that will be relatively cheap, which could be property, farmland, agri, other areas of interest, stocks potentially as well. So that's your answer to your question regarding triple digits. It's not if, but when, and it goes actually, in our view, likely into 4 digits and single-digit gold-silver ratio.
Hunt says silver's powerful rally is the result of a rare long-term technical setup combined with accelerating macro forces. According to Hunt, silver triggered a major breakout in November after a squeeze within a squeeze, part of a structure spanning 40 to 60 years. Entries near $25.90 have since driven prices to new all-time highs around $70. Hunt believes triple-digit silver prices are inevitable, with interim resistance near $90 before potential volatility. In his view, this is a secular blow-off market driven by hyperstagflation, where silver could ultimately reach 333 and even higher. He plans to rotate into gold and real assets once the gold-silver ratio hits single digits. Let's get back to the interview.
Dave Morgan, he was highlighting production and mining and how it was around 9.3 ounces of gold. I think it was 2019. None of these numbers I've remembered exactly, so just get the trend. 2020, it was about 9.1, 8.6, 8.3, 7.9. You're now at about 6.9 ounces of silver. The last known year, I think it was 24. We obviously won't have the numbers yet for 25. 24 finished in 6.9 ounces of silver are being pulled out the ground for every ounce of gold. Also, silver is being consumed, as you know, industrially, while the gold is either stored as bullion and can be brought as float back into the market at prices very, very easily. Now, silver also has bullion, but it has a much higher industrial burn of use case. Some of that is recovered, but it's costly. Some of that is not recovered because it's non-financially economic. I don't think that stays the way for too much longer. And the other key aspect about silver is that it's not being pulled out the ground by that many dedicated miners. It's a secondary product for many people, and that means you can't just up production because it's random. It's people who's digging a hole for copper. It's people who are digging a hole for iron ore, for gold, and other things because it's been so uneconomic. It is the most mispriced metal to mine exclusively for silver, that you have to have such good seams to be a dedicated silver miner. There's not a trillion market cap for silver miners, even, not even close. And there's not that many dedicated silver miners. You could shout them all out on a list, and you wouldn't have a long list, and you wouldn't have a particularly big conjoined market cap. So in terms of suddenly switching on, now that most above ground silver has been absorbed and taken out of the market, it's not something people are going to be able to do. And yes, if that's the mining ratio, I actually don't think it's outlandish to think gold silver ratio drops to below the 10 mark, into a number below that. In fact, if it was brought down to the level that it's mined at current levels, it would be 6.9. Now, obviously, as price fixes things, as price is increasing, more shafts will open again that might have been mothballed, that were non-economic, and supply will increase. But I still see that there's a realistic chance of single digits. If you think I'm too aggressive, go with 20 or 15 if you like. You will have done exceedingly well. We're still in the 60s right now. Gold silver ratio currently at 63.076. And we expected this degree of chop at the 65, by the way. Again, if we do a chart share another time, I can show everybody this, but we've spoken about the macro and 65. So we had a little bit of a dip down to sub 63. We rallied back up to 65. Gold was a little bit stronger. Silver had a little bit of a pullback. We made a new low, and now it looks like we might be rallying back up in the direction of 65. I'm not sure we're going to get there again. So you've got a lot of a multiple. If you think 20 and we're still north of 60, you've got outperformance by silver 3 times to gold, which is going up pretty damn decently itself. Don't forget, it's on a 70%, 68 to 70% return for this year itself. But if I tell you gold's going to continue to do that, and by the way, silver, you think it will go 20, you think I'm a bit too aggressive at single digits, well, you're talking about a 3x overperformance for silver next year to gold. And what people don't realize is they think it can't move that fast.
Analysts highlight a growing imbalance in silver supply that could drive major outperformance. The silver to gold mining ratio has steadily fallen from over 9 ounces per gold ounce in 2019 to roughly 6.9 today. Unlike gold, silver is heavily consumed in industrial uses, and much of it is not economically recoverable. Compounding the issue, silver is rarely mined on its own, mostly appearing as a byproduct of copper, gold, or iron mining, making rapid supply increases difficult. With limited dedicated silver miners and shrinking above-ground supply, a sharp drop in the gold-silver ratio is increasingly plausible. Even a move toward 20 from today's 60-plus levels implies significant silver outperformance. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.